morning, and thanks for joining us on today's episode of Crypto Insider. I'm your host along with my co-host, and we have a packed show for you today.
That's right. The biggest news of the day comes from outgoing SEC Chair Gary Gensler, who took one last shot at the crypto industry in an appearance on CNBC's Squawk Box yesterday.
Gensler has been a thorn in the side of the crypto world for some time now, and his latest comments didn't exactly offer a glowing endorsement of the industry as a whole. However, he did make some interesting remarks about Bitcoin.
That's right. Gensler essentially separated Bitcoin from the rest of the crypto pack, saying that while it's still a risky bet, it has the potential to morph into a different type of asset as more financial market participants worldwide start trading it.
It's worth noting that Gensler's comments came on the heels of his announcement that he'll be stepping down as SEC chair. So some might view this as a parting shot at an industry he's been critical of throughout his tenure.
Exactly, and it raises questions about the future of crypto regulation under the SEC. Will the next chair take a more lenient approach, or will they continue Gensler's tough stance?
We'll be exploring this topic further throughout the episode, but for now, let's switch gears to some more innovative news from the world of Web3. A company called DreamSmart has teamed up with Up Network to create Web3 AI smart glasses with integrated agents.
These glasses promise to pay users for using AI, which is certainly a novel concept. They're set to launch in Q2 2025, and it'll be interesting to see how they're received by the market.
This is just the latest example of how crypto and AI are intersecting in new and innovative ways. We've seen a surge in AI projects in the crypto space recently, and it's an area we'll be keeping a close eye on in the coming months.
Absolutely, and we'll have more on this story later in the episode. For now, let's take a quick look at how the markets are reacting to Gensler's comments and some of the other major news from the past 24 hours.
We'll get into the market analysis after this break. Stay tuned.
As we discussed in the previous segment, the world of cryptocurrency is no stranger to innovative marketing strategies. Speaking of innovative strategies, a rather interesting tweet caught my eye. Forgotten Runiverse, a new game, has launched an exciting campaign where players are encouraged to qualify for the Quanta airdrop.
That's quite an unusual approach. I mean, most companies would rather avoid server crashes at all costs, but in this case, it's actually an incentive. Can you tell us more about the game and this airdrop?
From what I've gathered, Forgotten Runiverse is an interactive game where players can participate in various activities, and by doing so, they put a strain on the game's servers. The more the servers are stressed, the higher the chances of qualifying for the airdrop. It's definitely a unique way to engage users and generate buzz around the game.
I can see how that would work, building a community around the game by encouraging players to participate in this challenge. But what's the significance of this airdrop? What can players expect to receive?
While the details of the airdrop are still somewhat scarce, it's clear that the developers are trying to create a sense of excitement and exclusivity around the event. Players who participate in the server crashing challenge will be rewarded with in-game loot and potentially other perks.
It's certainly an interesting approach to community building. Moving on, we've been discussing the recent market trends and the potential for a bullish recovery. However, a new report suggests that the stalled stablecoin supply might cast doubt on this recovery, especially with the U.S. inflation report looming on the horizon.
That's right. The combined supply of the top 4 stablecoins has barely changed over the past 30 days, which starkly contrasts the liquidity surge we observed during the November-December rally. This drying up of new stablecoin liquidity raises concerns about renewed downside volatility.
This is crucial information for investors as it might indicate a shift in market sentiment. The lack of new liquidity could lead to a decrease in buying pressure, making it more challenging for BTC to sustain its current price levels. What are your thoughts on this development?
It's essential to consider the broader market context and the impending U.S. inflation report. If the report shows higher than expected inflation rates, it could lead to increased market uncertainty and potentially even more downside volatility. Investors should be cautious and keep a close eye on these developments.
Absolutely. We'll continue to monitor the situation and provide updates as more information becomes available. For now, it's essential to remain vigilant and adapt to the changing market conditions.
So it seems like our discussion about market volatility earlier is already playing out. We talked about how certain coins were taking a hit due to interest rate concerns, but it looks like some of them are bouncing back.
Exactly. And one of the biggest winners today is Dogecoin. It's up nearly 11% after a significant drop on Monday. Bitcoin and XRP are also regaining some of their lost ground, which is good news for investors who were worried about the impact of high interest rates in 2025.
That's right. Dogecoin in particular is sitting at a nearly 7-day high, which is impressive considering the roller coaster ride it's been on. But I think what's more interesting is how this volatility is affecting the bigger players in the market.
Speaking of which, there's been some news about Deribit, the crypto options platform, receiving strategic investment inquiries. The CEO confirmed that they're working with FT partners to assess these bids, but ruled out any takeover reports.
Yeah, it's worth noting that Kraken had considered making an offer for Deribit, but ultimately decided not to proceed. The reported valuation of Deribit is between $4 to $5 billion, which is a significant amount. This could be a sign that the market is consolidating and bigger players are looking to make strategic moves.
Building on what we discussed earlier about market trends, this news could indicate that investors are looking for more stable and established platforms to invest in. Deribit's valuation is certainly a vote of confidence in the crypto derivatives market.
Absolutely, and it's interesting to see how this plays out in the context of the broader market. With Dogecoin and other coins bouncing back, it's clear that investors are still looking for opportunities in the crypto space. The question is, what will be the next big move?
Well, we'll be keeping a close eye on the situation with Deribit and other major players in the market. It's clear that the crypto landscape is constantly evolving, and we're excited to see what's next.
For now, it's a waiting game. We'll have to see how these strategic investment inquiries play out and what impact they'll have on the market. But one thing's for sure, it's going to be an interesting ride.
And we'll be here to guide you through it. Stay tuned for more updates, and we'll catch you in the next segment.
Building on what we discussed earlier about the growing institutional interest in Bitcoin ETFs, it seems like the options tied to BlackRock's Bitcoin ETF have seen an incredible surge. In just 2 months, they've grown to nearly 50% of Deribit's BTC open interest.
That's a staggering growth rate. To put some numbers behind it, the notional open interest in IBIT options stood at $11 billion on Monday. When you compare that to the $23 billion in open interest in Deribit's BTC options, you can see why this is such a significant development.
What's interesting is that Deribit's CEO has stated that the growth of IBIT options hasn't negatively impacted their business. This suggests that the market is expanding and there's still room for multiple players to coexist.
This growth also speaks to the increasing demand for institutional-grade investment products tied to Bitcoin. As we've discussed before, the approval of Bitcoin ETFs has been a major catalyst for this growth, and it's likely that we'll see even more interest in these products as the market continues to mature.
Speaking of the darker side of the crypto market, there's been some news about the company behind the illicit $24 billion Telegram marketplaces. Huonet has launched its own stablecoin, which it claims is not restricted by regulatory agencies.
This is a concerning development given the company's history. According to Elliptic, Huion has facilitated $24 billion worth of transactions related to money laundering, fraud, and other illicit activities. The fact that they're now launching their own stablecoin and chat service is likely an attempt to further distance themselves from third-party services like Telegram and Tether.
It's worth noting that this move could potentially make it even harder for regulators to track and crack down on illicit activity in the crypto space. The use of a proprietary stablecoin and chat service could make it easier for Huion to operate under the radar.
This highlights the ongoing need for robust regulation and oversight in the crypto market. As we've discussed before, the lack of clear guidelines and enforcement has created an environment where illicit activity can thrive. It's essential that regulators take a proactive approach to addressing these issues and protecting investors.
We'll continue to monitor this situation and provide updates as more information becomes available. In the meantime, it's essential for investors to remain vigilant and do their due diligence when dealing with any crypto products or services.
As we wrap up today's show, I think it's worth revisiting our earlier discussion on Bitcoin's price movement and the potential impact of this week's CPI figures.
Absolutely. We touched on the fact that analysts are predicting a surge towards $200,000 in 2025, largely driven by institutional capital flows and the anticipation of key U.S. inflation data.
That's right, and I think it's essential to understand the significance of the December Consumer Price Index CPI release scheduled for Wednesday. Markets are expecting a year-over-year increase of 2.9% and a monthly rise of 0.3%.
These numbers will undoubtedly have an impact on the market, and investors are watching closely to see how they'll affect the overall momentum of Bitcoin. The core CPI, which excludes food and energy, is also projected to grow 0.3% month-over-month.
Now, let's connect the dots here. If the CPI figures align with expectations, it could be a bullish sign for Bitcoin. We've seen time and time again how institutional investors respond to positive economic indicators, and this could be the catalyst that drives Bitcoin towards that $200,000 mark.
I agree, but it's also important to acknowledge the potential risks involved. If the CPI figures come in higher than expected, it could lead to a market correction, and Bitcoin's price might suffer as a result.
That's exactly why it's crucial for investors to stay informed and adapt to the changing market conditions. As we discussed earlier, the influx of institutional capital is a significant driver of Bitcoin's momentum, but it's not the only factor at play.
Looking at the bigger picture, I think it's clear that the crypto market is maturing and we're seeing more mainstream adoption. The fact that analysts are predicting a surge towards $200,000 is a testament to the growing confidence in Bitcoin's potential.
As we close out today's show, our key takeaway is that this week's CPI figures will be a critical factor in determining Bitcoin's short-term trajectory. Investors should be prepared for potential market volatility and stay focused on the long-term fundamentals.
And finally, our market outlook remains cautiously optimistic. We believe that Bitcoin has the potential to reach new heights in 2025, but it's essential to stay vigilant and adapt to the changing market conditions. And
thanks for tuning in to today's show, and we'll catch you all tomorrow for another episode of our daily crypto news podcast.
Don't forget to follow us on social media for the latest updates and insights, and we'll see you in the next episode.